Hi there, I'm Tyler Bollhorn from Stockscores.com. For our daily newsletter readers, I just want to quickly provide you with some analysis on some things that I'm noticing on some of the market indexes that I like to follow. From this table, you can see that there were some pretty good downward moves in stocks today, particularly in the Dow. The Dow ETF, symbol DIA, was down 2.2%. Let's jump to the gallery view of charts and get a better look at some of these charts, and I'll highlight some things on those charts. Now within the gallery view, you can blow up a chart just by clicking on it. And I'm going to draw some lines on this chart here to demonstrate something called a rising wedge pattern, which is always a concern for the bulls. You can see that the tops are not rising as quickly as the bottoms. That's what makes a rising wedge, that pattern. And of course today we had a breakdown from the tip of that rising wedge. Now there's another way to look at this chart if you wanted to consider it in the sense of an upward sloping channel. Like this and like this. You can see also that that upward sloping channel has been broken. So I'm quite concerned about the future direction of stocks, particularly the large cap stocks, and I would watch for this in the near term. Now if we go to the Canadian dollar chart, it's had a pretty good sell-off the last 2 days, but here the technical picture is actually not that bad, because if we draw a line across these rising bottoms, you can see that that is still intact. Now given that we have pulled back to that rising bottom line, we should get a bounce in the Canadian dollar as soon as tomorrow, and that's something to watch for, and that'll help some of the Canadian stocks which have had some selling pressure in the last couple of days. Now here's the chart for oil, and you can see that the oil chart is also pulling back to some support at the trend line. Not quite there. It probably goes down a little bit farther. Remember, this is the ETF. But I would look for oil to bounce soon. Just expect a little bit more downside before it bounces. Now gold is something that I've been pessimistic on for the last week or two, and the reason why is because of that falling top. It broke down from the falling top yesterday. It continues that downward move. It probably falls just a little bit more and then bounces. And that bounce will probably come with a strength in the Canadian dollar. But I don't like the pessimism that's shaping up on gold, and I would be looking to get out of gold in general right now. Finally, I want to take a look at the S&P 500 and NASDAQ charts, and we'll do that very quickly here. Again, you can see the rising wedge pattern that has been forming on the S&P 500. That was broken today. Unlike the Dow, however, we have not broken that upward channel. So it may be, and remember that the S&P 500 is a much broader index of stocks. When you look at this, you say, okay, well, the breakdown isn't as bad as it was on the Dow, because worst case scenario is we pull back to this upward channel line and bounce right about here. However, we could be setting up a falling top. So I would basically switch my rating to all of the U.S. equity markets from where I've been optimistic to now being neutral. Not yet ready to be pessimistic entirely because the longer term trend lines haven't been broken, but I am concerned about how we are flirting with those long-term upward trend lines. So a little bit of caution is warranted over the next short while. A lot of the weakness in U.S. stocks of late has been strength in the U.S. dollar. Of course, as the U.S. dollar goes up, it makes it more expensive to buy U.S. stocks. I think that we'll probably see that stall in the next day or two. We've rallied up to that level of resistance. However, the long-term trend is reversing. We've switched to rising bottoms where in the past we had falling tops. It's pretty important. You may see the US dollar come down into here short term, but as it builds this rising bottom, we could see a breakout to the upside, and that would be more weak for stocks than anything. But I mean, certainly in the past we've seen stocks able to go up in a rising dollar environment. I just think in the short term it may provide a little bit of psychological overhang for investors. That's about all I have to say tonight. I hope that's helpful for investors out there. Certainly the weakness today was a concern. It's not the end of the world, but it's the first step in taking a more negative approach to the market. I hope that you have a great day in the market tomorrow and trade well.